Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Now guys, let's take a look at the gold market. As you can see, market has confirmed our worst expectations about retracement. We have suggested that pullback should happen, but when it has started, we of course haven't expected that this will be so strong plunge on the gold market, especially after the significant upward action. So that's approximately the same story as on the euro currency. In today's video on the euro, we said that when you have the CD leg that's developing is rather fast, with the tail closing, fast acceleration, the sharp reversal of the same speed, especially when the market already stands above the OP target and has passed through the COP, OP mostly without the respect. If you remember, this was just a daily overbought. So the sharp reversal with the same speed, it's not a good sign for a bullish perspective. So theoretically, as on the euro currency, as on the gold, bullish setup is still holds because market stands above the C point and trend by latest sounds bullish, but this price action is a really warning sign. It's bring nothing good for bullish setup, and definitely we need some really valuable foundation background for thinking about taking long position in such circumstances. Also, it would be better to have some significant support area on our back before taking the long position, because at least if we will be wrong, the market after some retracement, some reaction on the support will turn down, this support could provide the technical bounce that will let us to protect our position. So that's the part of our trading plan that we usually follow and use when we are planning any trading. So what we have on the daily chart, as I said, it's really significant drop, and currently it's actually daily chart brings no hints on the possible bullish reversal. Maybe today, maybe grabber will be formed here if market will test the MACD line as on the euro currency, but currently we do not have this patient. That's why mostly we will be watching what is going on the intraday charts. On the 4-hour time frame chart, you can see market has erased our steep ABCD pattern because price has dropped below the C point. That's why this ABCD has been erased. Market has dropped below the pivot, and actually right now it stands around major fib support 1326. Below it 1319 is the weekly pivot support one. So guys, this is the point where the market should either turn up in this area or overall daily bullish setup will be destroyed and we should be ready for a deeper downward action. That's why on the hourly chart, guys, we will be watching for completion of this pattern. So we have here A, B, C, top, XOP. So initially, if you remember when we have talked about the hand shoulders, we thought that maybe just minor retracement will be formed because this really very fast action. In such circumstances, well, some reaction, yes, should follow on overbought on a daily, but currently, as you can see, its worst expectations have been confirmed by the price action. Market has dropped below confidence support that was around 30 and 35 here without no respect. Actually, as you can see, no signs even of the support, no bullish patterns have been formed here, the moments that we have talked about, and has dropped further to the major 618 support. XOP stands at 1319, so that's the level that we should keep an eye on before any even theoretical chances could appear on the possible reversal. So the picture mostly is similar as the twin to euro currency. We need to get the hitting of the major target, XOP 1319, and weekly pivot support 1, and we need to keep an eye on clear bullish reversal pattern. Maybe hand and shoulders will be formed. I don't know, maybe 3 drive, butterfly could be formed, but butterfly probably hardly possible because market already has dropped below these lows. So some really clear bullish pattern should be formed before we will take any even think about taking any long position here, because after strong plunge you need really valuable background, bullish background, to make the decision in favor of the long position, in favor of upward continuation. So that's what we will keep an eye on around this area. So maybe double repo buy will be formed here, because here we have the not bad thrust actually. And if the background for a position taken will be formed, when the market will form this technical bounce and kind of this, you can see retracement, we need to move our steps to the break-even. So that's why we use usually some supports that provides these technical bounces. If even market later will return back down, we'll be able to move our steps to the break-even and protect our position. The kind of trading that we have taken on the euro currency on the bread and butter stop 2 days ago. So that's what we'll be watching for on the gold market. Now it's really big question whether the bullish stop will be confirmed or not, because that's really, guys, daily chart is very, very strong dropping. If you will take a look at the fraction period, for example, if you take a look at the 2 days chart, you will see the huge bearish engulfing pattern right here. So it will be not really good. And in general, this price behavior, sharp drop after a strong rally, this is a bit irrational for normal bullish market mechanics, and that's why I suggest I will not exclude the big bearish consequences that could follow after this demarche by the gold market. But let's keep on the major support area on the intraday chart. This in fact the last outpost, bullish outpost for the market. This is the edge that separates the bullish from the bearish context on the market. If market will fail to form here something and fail to confirm the bullish ambitions of the market, that's probably will lead to the changing of the context on the daily chart in favor of the bears.